Hey everybody, welcome. Thanks for tuning in. My name is Matthew. Today we're going to take a look at the Bitcoin network. We're going to look at how much Bitcoin miners make in fees on an annual basis. All right, so this is about network fees. This is what Bitcoin protocol participants, users, people that want to send Bitcoin, want to transact on the network. This is what they pay miners to get their transactions into a block. And as I alluded to in the intro, we're not going to look at transaction fees on an individual basis or on a block level or on a daily level. We're going to look at them specifically on a trailing 12-month or an annual level. And there are two reasons for that. First is you get a nice smoother curve here with trailing 12 months. You can get a better picture, a better sense of what's happening on an annual basis. It's much smoother. And the second is simply looking at things on an annual basis is how the financial world works. That's how the economic world works. If you want to talk about yields, if you want to talk about the derivation of value of anything, whether it's crops, a farm, a gold mine, the simplest, most precise, and just the most practical way to look at how anything works is on an annualized basis. So that's what we're going to do now. So you see on the axis there, it says fees earned, TTM. Again, TTM trailing 12 months. So what you do with this orange line here, you see it looks kind of like SpongeBob's buddy, Patrick. Big jump here in 2018. But what we do to calculate this is we take a look at the total fees that miners earned running and contributing to the Bitcoin protocol over the past 365 days at any one point in time. Okay, so I'm not taking the daily value and then multiplying it by 365. No, I'm taking the total fees every day, but rolling that total constantly over a 365-day period. So let's just look here. Obviously, the top here is in 2018. What does it mean? Let's just look. 28 January 2018. Nearly 112,000 Bitcoins were collected by miners in the previous 12 months. That means from 29th of January 2017 all the way to the 28th of January 2018. Over a 365-day period, you can see that miners collected 112,000 Bitcoins in fees. And this is just native Bitcoins. Now, a trailing 12-month basis doesn't mean if we go to the 29th of January 2018 and we see on the 28th there was 111,849 on the 28th. If we go to the 29th, does that mean that miners collected again another 111,875 Bitcoins? No, it just means that's a rolling 365-day figure from the 30th of January 2017 all the way to the 29th of January 2018. So this gives us a smoother figure. It's a rolled, annualized figure, and it's real. It's real. It's what miners have made at any point in time over the past year. And so this little Patrick formation here, after the activation of SegWit in the summer of 2017, a lot of uncertainty here. If you were in the space, you understand this was the culmination of the small block, big block wars and the forks that came after this, keeping Bitcoin decentralized, keeping block space small. Of course, that was what won the day by a large majority. It wasn't even close. The UASF as well, showing that miners don't control the Bitcoin network. These were the things that came to a head here in 2017. But if we look here again, the top, about 112,000 Bitcoins on an annualized basis were earned by miners at the start of 2018. So that's definitely catching a lot of fee pressure that was happening here in 2017 while it was quite uncertain what was going to happen with SegWit. And of course, once SegWit was activated, block space became much more efficient, and fees did end up falling over the course of the next year. Everybody should be well aware the Bitcoin protocol way back here in 2009 is very different than the Bitcoin protocol here in 2017. And here in 2022 and 2023, we have now the activation of Taproot, Schnorr, a lot of very important Bitcoin features that also allow for more efficient transactions and do affect the fee market. But you don't have to worry about that. This is just a very simple chart. It's a very helpful chart to look at. Trailing 12-month basis of fees that active participants in the Bitcoin network are willing and ready to pay miners and have paid miners to have their transactions included in blocks. So 112,000 Bitcoins was the max by far at the conclusion of the scaling debate. We had a bump here, also relates to Bitcoin booms in price. Remember that Bitcoin price hit $1,200 at the end of 2013. So we're at 16,000 Bitcoins on a trailing 12-month basis here in fees. And then, you had these lulls during crypto winter, during drops in price. Then you had a big bump here again in the COVID years, 2021, kind of two bumps just before COVID and then after COVID, to where we were at 37,000 Bitcoins on a trailing 12-month basis paid to miners. Another way of saying that is earned by miners, same thing. And then it fell to where we are at close to, all-time lows, basically, at 5,500 Bitcoins per annum on a trailing 12-month basis as of 26th of February 2023. That is where this chart is finishing up. So those are the figures, and this is all in native terms. 5,000 Bitcoins per year is not as low as it was a few months ago. We're actually under 5,000. Let's just zoom in here, make it easier. A little bit under 5,000 Bitcoins per year in the summer of 2022. But to get to that level, you'd have to go all the way back to the crypto winter, mid 2014s, late 2014s, early 2015s, and then even before that bump in 2013, that was the first time ever that fees got above 5,000 Bitcoins on a trailing 12-month basis. And you see here, let's zoom in again. If I go to January 2nd, 2010, this is the first full year that we have. Okay, so January 1st is 0, 0. I'm only counting full years here. So January 2nd, 2010, remember Satoshi launched the code, the Genesis block, on January 3rd, 2009. So from January 3rd to January 2nd, 2010, that's a full year. And you see that over the past year, basically all of 2009, miners earned only 3 Bitcoins in fees that very first year of Bitcoin. And Satoshi actually turned the code off for a couple days, worked on it, actually released it officially to the public on January 9th, 2009. Nonetheless, the early days of January 2009, the Genesis block Bitcoin was launched, brought into existence, and you see a year after, 3 to 1 Bitcoins on an annualized trailing 12-month basis as far as miner fees go. And it wasn't until the start of 2011 where we started to see more of an uptick, where you went anywhere above 100 Bitcoins basically in fees. And we haven't looked back since, but you definitely see it's not a straight line. It can be very volatile. It can be very different. But if you look at this again on a trailing 12-month basis, it's kind of interesting. So now that we've looked at it in native Bitcoin terms, let's go ahead and look at it in dollar terms. Again, same principle, a rolling trailing 365-day basis. So depending on what the fee was at any point in time in Bitcoins, you multiply it by the roughly day-end price. That day, you'll get a dollar value, and then you look at the fees the next day, and you keep rolling the different amounts of fees in dollar terms, add them all up on a trailing 365-day basis, and you will get this same chart in dollar terms. And this looks quite a bit different. Here it comes. All right, this is on the left axis now, and it's in million. All right, 1,000 million is a billion. It's in million. Just look at the tooltip. It's helpful for you. So you see here, the orange line follows it a little bit. Patrick's head here is definitely more extended in 2018. And then if you look at the green now, the dollar in dollar terms, trailing 12-month fees for miners, kind of looks like two desert buttes here. You have two big spikes, which again, the trailing 12-month nature of tracking the fees, you can see that this fee pressure started really in 2017, but it's tracked all the way till 2018, and it fully ends basically at the start of 2019. So you're really tracking a lot of 2017's fee pressure here when you look at it this way. And the same thing goes for what happened in 2021. You're catching a lot of 2020's fee pressure here. If you're looking at, say, mid 2021, okay, you're catching half of 2021's fee pressure. And remember, this is when all of the meme stocks, they took off really in December 2020, January 2021. So you can really see it ramp up hugely here to where we get a different picture now. The dollar top versus the Bitcoin top is different. Bitcoin's top in Bitcoin fees to miners, 112,000 Bitcoins here in 2018. Think about that, 112,000 Bitcoins per year. And here now, it took all the way till 2021, July roughly, to get a fee top in dollar terms, $1,150 million. In other words, $1.15 billion. Now, if you've just concluded, hopefully, watching my money supply series on the dollar, if you want to talk about money supply in the United States alone, you got to talk trillions of dollars, thousands of billions of dollars. But even if you want to talk about one industry, I don't know, Tesla, Apple, Microsoft, even mid-major type companies in the stock market, all right, these companies are going to be making billions of dollars a year in revenue. The Bitcoin industry, as it relates to fees only, we will talk about the issuance of coins in the next video, but as it relates to fees only, the max the Bitcoin industry has paid to miners on a trailing 12-month basis is $1.1 billion. So the next thing to garner from this video is basically still how nascent we are as an industry. But it's interesting here because obviously the price has been rising. I don't need to show you the price here. Hopefully you're familiar enough with the industry to understand that, of course, we're at $60,000 Bitcoin here. So even though we had in Bitcoin terms, you had basically a third of fee volume here, 36,000 Bitcoins on a trailing 12-month basis, June, July 2021 in Bitcoins. That's roughly a third of what you had here back in 2018. In this boom here in 2021, in dollar terms, you were 40% higher in dollar terms. So it only took a third of the amount of Bitcoins to get you 40% higher in dollar terms. This now you can start to see how the economics of Bitcoin as it relates to fiat money, as it relates to its price, as it relates to hash rate, which we haven't talked about yet, we will get to. These things start to look interesting. So two big bumps here. You have a little bit of a bump here in dollar terms. It's not really much. If you catch the 2013 boom here, you're at $2-3 million on an annualized basis for the entire Bitcoin industry. $2-3 million in fees paid to miners, 15,000 Bitcoins. Way different, obviously, than what happened in 2017, 2018, and in 2020 and 2021. 21. Okay, so that's all I wanted to show you here as far as dollars versus Bitcoins. But as the dollar is the world's reserve currency, still everything is priced in dollars. Oil, natural gas, gold, lots of stuff worldwide. We've talked about that in our money supply videos, of course. As everything is priced in dollars, I want to continue the analysis only on dollars here and not with Bitcoin. So let's actually take off the native Bitcoin fees. This is definitely something to keep tracking. We will track it. It's very interesting that it's at a fairly low value historically. 5,500 Bitcoins, 5,600 Bitcoins on a trailing 12-month basis paid to miners in fees, way lower than it was in 2018. Of course, the native unit of the Bitcoin protocol is the Satoshi, 100 million Satoshis in a Bitcoin. All of that needs to be tracked as Bitcoin is digital cash. It runs without any native connection to the US dollar. Nonetheless, the exchange rate is a powerful tool in finance and economics, and of course the dollar is the world's reserve currency. That is the headline price that everybody knows when they think of Bitcoin. So let's take off Bitcoin fees here in native terms, in native Bitcoin terms. Now we just have the left axis to pay attention to. And again, a couple hundred million, max $1 billion, as far as total fees paid to miners on a rolling, trailing 12-month basis or trailing 365-day basis. So we're going to start to look at this in log scale. That will also help, but we're going to draw a trend line, which actually has a pretty good R-squared. Definitely see our regression videos, the linear, log, exponential, and power regression explainers that I did at the early part of this channel. Going to draw a power regression and see how that looks right now over this data, trailing 12-month Bitcoin fees. Okay, linear scale here, still linear scale. Power regressions, they can go either way depending on the data. This is concave up. Concave up means the bump is facing down. So this is the trend line, 90% R squared. What does that mean again? Very briefly. It means that the way that these fees on a trailing 12-month basis, priced in dollars, move around the trend line, the black line, the way that they move around it is 90% better with 90% less variability, or 90% better than the data would move around the all-time average. So again, see the video explainers for that. 90% R squared is pretty good. It's pretty good. You have to be careful. You have to look at the data, use the eye test. I'm not saying that this is gospel or anything, but trend lines really, really give you as well a very unique look, and I think important look into how markets work. So here we have the power regression. And now I'm going to go ahead and I have to put all of these percentile bands on and put it into log scale first. So I'm going to do that right now. Take off Bitcoin again, and let's actually take off the bands. So we're back on log scale. And now you can see, by the way, that the trend line is completely the opposite. Here you have it on log scale. The trend line is now concave down. The bump is facing up. It's concave down. And that's just how it works on log scale with the power curve. So much easier to see now, trailing 12-month fees, not even, 40,000, 50,000, some here in 2011, 2012, in dollar terms, based on Bitcoins that have been paid to miners. We were above trend, a little bit here in 2011, then under, then above again. Now we're into the millions in actual fees. 2 million in fees here in January 2014, so we took the 2013 boom into account. But look at the regression trend line. It's only 1 million. It says fees should only be about 1 million here, based on this 90% R squared power regression trend line. 2.5 million in actual fees. Then the crypto winter, we drop underneath again. So the trend line here now in November 2015 is much higher. 9 million now, the trend line, much higher than what we just looked at. But fees are only double from what we just looked at. They're only at about 2 million. Whereas here they were also about 2 million, sometimes 1 million, but fees are about the same, you can say, than they were back in the previous cycle top. and then you start going again. So this is how markets work, right? The pendulum keeps swinging. It doesn't stop right at the bottom. It definitely overshoots the trend on the upside and the downside. So we go here again, UASF and a SegWit activation, and finally resolving the scaling debate for Bitcoin. We top out here in 2018 at, let's just zoom in here, 770 million dollars, whereas the trend line at this point is it's only 50 million. It's only 50 million. Not even 10% of the actual fees is the trend line. All right, so we're 10, 12, 13x more fees versus trend line in 2018. So reset the zoom, and then the pendulum swings back. We go, the price falls, we go under again, all on a trailing 12-month basis here of fees paid to miners. Cross it again on the upside here as we go into the COVID years, meme stocks, and more trading online. And then after the major crypto scam blowups in late 2022, mid to late 2022. But even before that, interestingly, we start to fall as the price, of course, falls. But this is a little bit different than price. This is price times fees in Bitcoin. So a little bit different. Interestingly, by March of 2022, we were already back under trend line. And the most egregious scams hadn't even happened yet. Luna, Terra, Celsius, they were all in May, June, and then of course FTX in November. So then we go down again. Where we go to today, roughly on a trailing 12-month basis, miners make $136 million in Bitcoin fees. $136 million people pay to miners collectively, network-wide, to get their transactions in a block, where the regression trend line is $1 billion. It's $1 billion. So you can have trend lines, and you can have well-behaved, well-fitting trend lines, and the data can still be volatile. It can be well above and well below, and that's what you have here. So it's a well-behaved trend line at a 90% R squared. This line, this black line, works much better than the average. All this is telling you, the 90% R squared, it's 90% less variability of the way that the green data moves around the black than it would move around the average. So it's pretty good. It shows us that the goodness of fit is actually pretty good here. And we're pretty low. So how low are we right now? Let's put our 1 sigma down, 1 sigma up. What does that mean again? Anything that you see inside of these blue bands now is 1 sigma standard deviation, i.e. 2/3 of the time. 2/3 of the time, the data falls in within these blue bands based on the trend line. And you can see that that's how it looks. That's how it looks. And they can be extreme. So let's just look again here at the top of one of the tops of 2018. February, the trailing 12-month fees were $750 million. Over the past year were paid to miners. The trend line was only 50 million. 1 sigma down would be 17 million, and 1 sigma up, 130 million. So we're well outside of 2/3 of the time of observations. We're only in a 1/3 of the time territory here, clearly. As we are now, except to the downside now. So let's go to 2 sigma. Let's see how 2 sigma looks. First 2 sigma up. Let's just look at 2 sigma up here again. Let's keep on 2018, which, remember, if we put the Bitcoin fees back, this was the most ever, 112,000 native Bitcoins transferred to miners. But in dollar terms, at that time, let's just zoom in, make it easy, $750 million worth on a trailing 12-month basis paid to miners to get transactions into blocks. 2 sigma up, 640 million. And so we're about 100 million over and again, this is log scale, so keep that in mind, 100 million over the 2 sigma up line. What is 2 sigma? Again, that means anything that would be below the red dotted line or in between the red bands would be 95% of the time. And actually, it's even so it's even less than 5%. It's 5% divided by 2. So as this is 2 sigma up, anything above the red dotted line is a 2.5 percentile event. Only 2.5% of the time would the data get above the red dotted line. So it's quite rare. And you see here, notice this boom, even though it was, this is a max in terms of dollar terms, right? We got over $1 billion now. This is only a 1 sigma event, not even close to the 2 sigma line here, interestingly, in 2021. But now we're way down. We're way down after the $60,000 to $20,000, $15,000 drop at times, $23,000 roughly at the time of recording here. So in dollar terms, trailing 12 months, Bitcoin fees paid to miner every day over the last 365 days. Today, $136 million. The trend line, as we talked about, is $1 billion. 1 sigma down would be 350 million. We're well under that. What about 2 sigma down? Let's zoom in. We're even under that. So it's a little bit easier, I think, with both red lines. Now let's take off the blue lines even. Anything that, let's zoom out first, just to explain again. Anything between these red dotted lines is within a 2 sigma style occurrence. So 95% of the observations will be between these 2 red lines. All right. We are outside of them. All right. So what does that mean? It means the way that this works is 2.5% of observations will be above the top red line, and 2.5% will be below this bottom red dotted line. So we're actually in a 2.5 percentile event to the downside right now. And we have been since late 2022, since about exactly the FTX debacle. Hate to even bring that up in this video, but that's what happened. So in dollar terms, trailing 12-month fees paid to Bitcoin miners across the network, only $137 million at the moment. And the 2 sigma down trend line is $180 million. So we're $45 million below a 2 sigma down, or, we're outside the band, meaning we're only in 2.5 percentile type observations for these types of mining fees. The Bitcoin network changes all the time. Fees change all the time. The market changes all the time. But if you start to look at these things both in dollar terms, in Bitcoin terms, and if you analyze this with a really important regression trend line here, the best fitting regression trend line is a power regression at 90% R squared. It really does illuminate the picture and show us where we are and perhaps some of the opportunities. So hopefully this video can help both our mining friends out for some perspective, and you as well, if you're interested in Bitcoin mining or just in generally the economics of Bitcoin here. We've only looked at fees on a trailing 12-month basis, and in dollar terms, we're in pretty rare air to the downside. Thanks a lot for watching. Take care.